Really interesting discussions there, and we're going to bring that into the conversation in this panel. As the topic suggests, we're going to be looking at investment opportunities in CEE, and by that I'm looking at the whole of the region as well, so it'll be interesting to get the views from everybody here. There'll be team 1 microphone and team 2 microphone, so hopefully you've got those, and that will be fine. So let's start with some quick introductions. I'm going to start first of all with you, Adrian. So if you take the microphone and then pass it along, and then we'll be in good order. And if anybody has any questions or any thoughts, raise your hand, shout out, do whatever is necessary to let me know, and I'll make sure that we bring those in as well. Adrian, just a quick 30 seconds for those. I'm sure everybody does know you and everybody on the panel, but let's just start with 30 seconds on who you are and what you do.
10 seconds. Adrian Karczewicz, I'm responsible for transactions in Central Europe for Skanska, which is the global development investment company. So I work in Poland, Czech Republic, Romania, Hungary, and I have some other projects where I work outside in Skanska world, in Finland, UK, US. So I deal mostly with investors. Thank you.
Great, Mirella.
Brilliant. I'm Mirella Calota. I'm a director in deal advisory, real estate and infrastructure at KPMG in London. My connection with the CEE is the fact that I'm Romanian as a background, so that's my connection. I lead financial due diligence engagements on a large variety of real estate asset classes. I'm very much specialized on student accommodation, but I also cover the transport infrastructure side of things, so whatever it's airports, airlines, ports, rail, roads, and the logistics side of like transport. Thank you.
I've got mine. I'm Justyna Kędzierska. I'm heading the Warsaw office of Berlin Hub. Berlin Hub is a German real estate lender with the core market in Germany, of course, as domestic market. The other markets we are present in is France. This is the Netherlands or the Benelux countries. And Poland is the third main market of Berlin Hub activities. We are also from our Warsaw office, we are also covering the Czech market. We are not present in other CEE countries, still have some perspective relating those countries as well. Thank you.
Great, Tim.
Good morning, Tim Wilkinson. I run the operations, oversee the operations of Intertech across Europe, which is acquisitions and real estate operations. Europe for us is Portugal, Spain, Italy, Greece, Southeast Europe, and Central Europe. My background in Central Europe goes back 25 years. I've been living in Central Europe for 25 years. I'm clearly not local, I'm British. I came to Romania, excuse me. I came to Poland 25 years ago. I lived here in it was 99 I came to Poland. I lived here for 12 months before really the market took off. So although I'm not that up to date as some of the people in the room in Poland, I look back over the last 25 years and I saw what it was like before. So yeah.
Very good. I'm going to come to you in a second as well, Tim, just to pick up your sense of, we'll be able to pick up the Polish market as well, but I really want to be able to drill down into some of the other markets as well. And interestingly, last night I was looking at, because it's obviously 20 years since EU accession for the first group and the biggest group of CEE countries. And I was looking back at the PwC ULI Emerging Trends report from 2004, just to see what was happening there. And the comparison was really interesting because it said a lot about the excitement about those countries coming in. But interestingly, I'm not going to make you guess because we haven't got time for this, but the top country, the top city rather, in their top cities in terms of best opportunities was Moscow. And at the bottom, it was Berlin. And if you look at that this year in 2024, Moscow obviously isn't even on the list at all because of geopolitics, one of the areas we obviously mentioned in the first panel. And Berlin, I think, is at number 4 now, with Madrid at number 3. So huge changes happen in 20 years. So it's really interesting to look a little bit about, you know, in the later sessions as well as where we've come. But Tim, let's pick up with you. We're looking at investment opportunities. You're looking at acquisitions. So I guess I know from a sort of investment strategic point of view, you also look at value add opportunities. We've seen a lot of value add money raised. Patron Capital raising 860 million last week was announced. So I suppose let's look at the strategies, where you're seeing the opportunities in the markets where you're active.
Well, we don't have any allocation by asset class, geography. We go where the opportunity, the opportunity is there at the time. Over the last I joined the group 3 years ago. By the way, I live in Romania, so actually that referenced Romania, and also when we talk about Central Europe and Southeast Europe, that's where I'm living at the moment, which explains my confusion there. But we cover the other side of Europe as well, and where we look is basically where we see opportunity at that certain time. Now, living in Central Europe or Southeast Europe at the moment, the last 3 years has made it look very expensive. So Poland until last January was not repricing like the rest of Western Europe. And after 20 odd years of being in Central Europe, to again step outside and look back from Western Europe, I had a different perspective. And I think what I've seen from this, is the sound okay, or there's a whistle? Looking back in, Western Europe has repriced in a way that Central Europe and Poland hasn't yet. Poland started 12 months ago. Romania hasn't really. Czech Republic hasn't, but maybe signs that it is. Hungary has to some degree. And then Bulgaria and Greece are just as if it's 2007 again. So where we look for opportunities is where we find that extra value add return for decent assets. Now, we have been buying in Spain. We have been the only bidder on certain assets, enclosed shopping centres and hotels where we are the only bidder, which we could not imagine when there's a 15 billion, normally about 15 billion take-up in Spain, which is the whole of CEE together. That's the kind of liquidity squeeze we saw. That came after France changed and the UK changed in that order. So UK, France, Spain repriced after 2022 or during 2022, Germany, and then now we're seeing it in Central Europe. So we go where we see this opportunity. At the moment, if we look at something in Poland, it could be that we decide to do something in Italy instead, purely based on opportunity cost. And at the moment, the compelling case for buying what we buy, which is value-add retail, logistics, office, or hotels, is much more in Western and Southwest Europe than it is in Central Europe, purely because the story, the narrative is more interesting. We understand the growth and all the fundamentals of this region. We understand everything. We are based, obviously, out of Hungary. We understand it's more than most Western investors. But the compelling story is not yet back in Central Europe.
Okay, good. I'm going to come back to you on what's driving the Hungarian market in a moment. But Justina, just coming to you, if we look at, I suppose, where we are at the moment when we're looking at the market, finance obviously a key element of that. And are we beginning to see more deals come across your table? Are we beginning to see more activity coming through?
Yes, indeed. I think that the last 2 months, so last weeks in general, we've seen really a huge inflow of inquiries, let's say. Of course, it does not mean that these transactions will happen indeed, but this is definitely, well, from my perspective, a positive sign of the, let's say, returning activity or increasing activity. Obviously, well, not all the financing proposals, opportunities are totally attractive from our perspective, and of course we are, as always, as we have always done, we are also running our analysis really with a cautious approach, like, you know, to make sure that this asset is the one to be there. This will remain an attractive investment product, sustainable investment product also in future.
Okay, good. And Mirella, I just want to come to you. You're obviously based in the UK, looking at some of those opportunities, but also in CEE. It would be interesting to get your sense, particularly because you mentioned infrastructure there. And we're increasingly beginning to see far more of a crossover in terms of real estate and real assets. Again, if you compare the 2004 trends report, it was as you would expect. It was offices, warehouse, retail, and others was how it was situated. But if you look at it this year, for example, top is new energy infrastructure that investors are looking at. So how much of an opportunity do you see in that? How do you see those trends coming over from potentially the UK, other markets you're looking at, and how do you see that translating to this region?
Sure. So if you ask me what keeps me up at night at the moment is unfortunately not real estate, or not that much. It's airports in particular at the moment, particularly in the UK. It's quite bubbling, and that's because of the revenge travel that we had in the post-COVID period. So passengers numbers came back to pre-COVID levels, and that's really boosted this sector. We had Heathrow transacting last year, we had Edinburgh earlier this year, and there's much more to come. And that will probably have a ripple effect on Europe as well. I already see that in Italy. And I'm bringing this subject because it has other consequences on other, related real estate sectors, such as hospitality. So in hospitality, I think in Europe, we had in the first quarter this year, we had volumes higher than 2023. So it's like bubbling. And again, the travel industry. So it's all interrelated, and there are obviously other infrastructure crossover, data centers as an example, which probably the CEE region needs to focus much more, because that's what Asian markets like to see, for example, to deploy capital. Life sciences as well, it's another area like crossover that should be invested more. But equally, if I speak about data centers and life sciences, those are hugely energy consuming, buildings. So you have the ESG piece probably there, like, which my colleague Monica here will talk about more like later on.
Okay, good. We're certainly seeing life sciences and those elements coming much more into the discussions that we're having. And again, all of those elements of living, which would have been in the other sector in 2004, whether that's student housing, which was mentioned in the previous panel, whether that's senior living, co-living, affordable housing, all of those elements beginning to be much more of a focus for investors generally. Adrian, I'm just going to come to you, which is good. Let's pick up a little bit. You're obviously looking at the office sector. You're also looking at what's happening in terms of international capital and its appetite. So I guess let's pick up on those two things. How do you see the opportunities in office? Is that being viewed differently now? What's the situation, and what's happening in terms of investors, international capital, particularly accompanying you into this region?
Sure, and I wanted just to underline one thing. I have something common as well with Romania. So I lived there like 9 months with my family. So I live in Bucharest. I enjoyed that a lot. Yeah. So we have a, I don't know about you, Justina, but you have to,
Not yet.
Okay, you have to go there. So coming back to offices, yes. I stopped actually, Richard, going to London. I feel so depressed when I go there, and I tell you why. When I'm at these different meetings and everyone is like asking about introduction and of course, private equity, logistic, whatever, some other asset classes. And then I just raise my hand, it's office developer. And, it's like people just look at me with, the sorrow in their eyes and like, oh, you poor Adrian, yes. It's going to be, like a second shopping center. So I stopped going there. It makes no sense, yes. You have this, handicap of like, this American, of course, circumstances which have been described about the market. So definitely, we live in a bit of a different world, and I think investors, they got to this idea of yields, and everyone is looking at yields, and they are not looking at rents. Yes. So when asking me what investors are doing, they still have this kind of old approach, like we have to you look at the yields. The yields in Warsaw at whatever 6, below 6 for prime office. Why should we invest in Warsaw if I can buy in Edinburgh at 7? Yes. So and of course they simply underestimate the change which has happened. Yes, you cannot buy anymore a building sitting in Dublin and just looking at the map, like it used to be in the old good times in Warsaw or in Krakow. Yes, so you have to be there. Yes, you have to look at not at the city, not at the district. You have to look at the cross section of streets. Yes, you have to look at the parameters of the neighboring buildings, rents, demand, coffee shops, whatever. Yes, so it has changed. Yes, and then when you analyze this, when you have spent enough time, you can make a proper decision. So then you can look at the difference between Edinburgh and Warsaw, and you can see that you can buy a building which let's say in the CBD of Warsaw, top class ESG, that you probably can match maybe in London, which is under rented. Yes, and then you can look at the yield and say, hey, is it really 6, or I should pay a bit more or lower yield, so that I accommodate for this lower rent, because of the fact that the rents are I don't want to say skyrocketing, but I'm very much in favor of the growth of the rents on the Warsaw market. So simply, you have to look at the basics of what has been a bit, forgotten in the last years. Yes, you have to have your local team, in this city. Unfortunately, you don't have. It's no longer 3 people in London sitting and buying in Asia, Sydney, UK, and US. Yes, you have to, start a bit, with a different approach. Sorry, maybe I'm taking too long, but is it an answer to your question? Or?
No, it is an answer to the question. I guess what I'm also interested in is, despite obviously your poor welcome in London, and I'm sorry, and you should just come and have dinner with me instead of Adrian, that would be much easier. But are you beginning to see more activity in terms of people looking to buy into the sector again? I mean, I was at the property tour yesterday. For anyone who wasn't on it, we also visited a new development here, Skanska development, in terms of shared office space. So are you seeing still appetite for it in terms of the investment? What's happening in terms of, I suppose, sales and those divestments in that side?
But asking about the shared spaces or just overall office?
Just overall. I'm just wondering whether the transactions are there.
No, I mean, it's public, yes, so I can say that we have divested studio, our prime office building, to Stena just what 1 week ago, yes. So, I mean, again, yes, we have been the last to sell, before this event started in 2022. So we sold Generation Y to Hansa end of December 2021, and I believe we are opening the stage. Yeah? So I mean, this proves the market is back. We had a period of course, of COVID and the war, but I believe investors see the opportunity in the prime end of office space. Yeah? So coming back to this, shopping center type of melody, I mean, shopping centers have been hammered, across the board. So the yields moved out, dramatically. But what will happen on the office on the office side, what are investors looking at is the fact that there will be this bifurcation. So you will see prime office investments still yielding, excuse me, let's say at the good rate, good yields. And then you have the other part of the market, which you can, let's say, describe as this, what LTB team is looking at, this value-add opportunistic, where the yields will be moving out, like on the shopping center, path, yes? So this will be the difference, yes? I believe, as again, I think Marcus mentioned, or someone from the previous panel, that there is like a aging of buildings, yes? It's not only US. When you look at this, Cushman-Wakefield analysis of what's happening in Europe, I think, you know, like more than 50% of office space in the Western Europe is over 30 years old. So maybe not 50, but 30. So, you know, what kind of product is that? So then you're coming to this, you know, prime end of the market where tenants are actually looking at, and then when investors are seeing that, you know, this is probably, you know, the future-proof investment, so they are looking at building sex studio. Yes. We have interest also at some of the regional assets, you know, the assets which we have in regional cities of Poland. I have, you know, actually quite interesting situation in Bucharest, coming back to Romania, where we just, you know, received some price, you know, quite a good offer on one of our buildings. And I see more and more calls for office investments in Bucharest. So I think, you know, this is happening, and as you see, this is Scandinavian investors looking at Poland. We have, of course, you know, Czech, Hungarian investors looking at Poland and expanding into as well Romania, Hungary. So this, as you can see from statistics, mostly local capital, meaning Central European capital, but at the same time you have Scandinavian, you have Baltic capital, you have French REITs which are looking at Poland, you know, for at least, you know, a bit different approach than Germans, because, you know, you have to be honest, I mean, Germans are out, yes. You have DECA maybe looking a bit at the market, but other than that, maybe Commerce, but there's not so much of a push, or rather, you know, push back from the German.
Okay, good. Interesting to see that. I'll pick up from you on that as well, Mirella, in a minute. But Justina, just coming to you, let's look a little bit about some of the sectors. Obviously, in the panel we've just had, there was a discussion around PRS, the private rented sector, and that's obviously been growing here in Poland. A big focus, of course, on logistics. So I guess let's just run through, from the bank's point of view, the sectors that you're keenest to finance. Where do you see those areas? Where are you comfortable, and where are you seeing maybe opportunities at the moment that the bank isn't comfortable now in this market, but maybe heading in that direction as well?
Well, we by definition concentrate on the so-called traditional market segments, and I believe that in every market segment you can find adequate opportunities, adequate deals, I mean, which meet our preferences, our criteria. Well, I'm also a big believer in the office segment, I must say, and Warsaw is just like, no doubt, from my point of view, Warsaw is the capital city of Poland, and well, there is just one way for the city, meaning the growth, and I don't see any other scenario. And it was also mentioned in the previous panel that the whole the cycle we saw in Warsaw, I mean, with hundreds of thousand new space delivered some years ago, and then the fear of everyone, wow, what will happen to the market? You just need adequate time. You just need the market to react. And right now, Warsaw market is in a totally different situation. Well, I hope that the story will repeat in case of the regional office markets, which are suffering right now. The other markets, well, logistics remains attractive segment from our perspective as well. Obviously, you always need to look that the product is right, that the location is in line with the investors' expectations or requirements. Again, so sustainability. In retail, we also closed a transaction or a financing last year in retail, in Warsaw retail. It was Promenada. It was also published. So we definitely do appreciate and understand the difference between the American or even West European model of retail. Well, if compared to CEE in general and Poland in particular. You mentioned PRS. PRS is definitely one of the most interesting markets currently. Nevertheless, from a German lender perspective, the main challenge remains the currency risk. I mean, residential market is always a local currency market, and you will not change it even if you have certain assets rented in euro in your portfolio. The market remains a PLN market. So we are trying to look for adequate solutions to accommodate the market needs and to remain in line with the banking supervisory regulations in terms of currency risks, etc.
Okay, so that's the challenge for you at the moment in that particular area. That's interesting. I'm going to come to you in a second, Tim. But Mirella, just on you, I wanted to come back a little bit on the airport. I like the idea of revenge travel. I think that's good. And certainly when we were in Cannes for MIPIM, Courtney and I were having a number of discussions with a lot of the cities and regions around the airport and airport infrastructure and how those are becoming mini cities in a way and retail destinations. And a lot of focus on that area. So I agree that's an interesting one to watch. Let's pick up a little bit on Romania. Just in terms of your sense of that, you're obviously partly inside the market and partly outside. So yes. It would be good to get your take on what are some of the key drivers there. What are you seeing, and why should Justina and I go there? That's the key point.
Bless. Yes, so I think obviously logistics is all over the place, and retail parks as well. I was very excited to see the MCOR deal, so London and Cambridge properties acquisition towards the end of last year. It was 250 million transaction on 25 retail parks. That's British capital, it's Western capital, so it gives confidence in the market, and maybe others might follow. And I think they also acquired some plots of land more recently to develop with like joint ventures with Lidl. So that's again positive. I think one thing that is potentially missing in Romania and in the region, and I'm talking that from discussions with Asian markets, Singaporean investors. I travel to Singapore quite often to take, their vibe locally. I think student accommodation is definitely something that the region needs to focus on more and try to diversify and try to build platforms, because Singaporeans, they like operational real estate platforms with efficiencies. The latest one that we had in the UK that I worked on was Student Roost, which was JC acquisition from Brookfield, 23,000 beds. It was a mammoth, and it was built by Brookfield in time over, 7-8 years with bolt-on acquisitions. And it's something that, in my view, could be over a period of time, maybe replicated in the CEE, that model to attract Asian monies.
Okay, good. Yeah, interesting that point, I think. And if you've seen the growth of student housing across Europe and how people are looking at pan-European portfolios, which certainly wasn't the case 10 years ago, and you're beginning to see a similar kind of drive as well for different forms of living, including the senior living side, before you begin to look at moving into healthcare and those elements, all of which have been moving up the list of investors. Tim, let's just drill down a little bit into the Hungarian market. And obviously, Marcus mentioned fundamentals are key for an investor when you're looking at those. So let's drill down a little bit into some of those markets where you're active in CEE. What's driving those, and where are the opportunities, do you think, even if at the moment there may be a pricing kind of issue which is driving you to look at other markets? Where do you see, if we look slightly further ahead, the opportunities coming?
Well, I think, first of all, I don't actually cover Hungary on a day-to-day basis because we have such a big team. They're much better qualified. But I think in the context of Central Europe, it's easier to understand where the opportunities are. I think the whole issue for Central Europe is about liquidity. Liquidity on the way in, liquidity on the way out, and how you try and then look at this from an investment timeline. If you look at the Western markets of Europe, most of them, when things go wrong, they transition, they reprice pretty quickly. London, within a quarter can reprice and bounce back again. The office market did this 2 years ago when Prime Minister Truss came up with some pension plans, and it just basically the pensions took the money out of the office market in central London. Huge amounts of volumes were traded, and that was just a repricing that happened within a quarter. So when we look at Central Europe, Poland is leading the way in terms of the profile of capital that is here, that is not necessarily in Hungary, not in Czech Republic necessarily, Slovakia, Romania, and beyond. So if you look in, say, the core markets of the West versus Poland, Poland does have some of the large American, Asian, European investors. And that means that actually when it comes to it, obviously when the money flows in, they like the opportunity. Poland's the obvious place. They come in, they create liquidity. But when things turn, meaning that people say, the US investors say, I no longer want to have offices in Europe, they will make a decision to exit, and they will make a strategic decision to exit, and they will move quite quickly. And that will drive the level of liquidity in certain countries. In the countries that are smaller beyond Poland, so Hungary, Czech Republic, Slovakia, Romania, the money that is invested, a lot of it is domestic, a lot of it is small or regional funds that actually don't have the same timeline as a 5-year value-add fund from the US or a 10-year core fund from Germany. If you look at Central Europe on a 10, 15-year timeline, in my mind, there's no question about the potential opportunity that Central Europe generates. If you look on a 5-year basis, I question sometimes the optimism that we all have sitting in Central Europe about whether or not we should be so bullish that this is going to be a straight line up. Now, I know Poland didn't have the same problems that Romania had and Bulgaria had and other countries had in 2008. But I think we have to reassess a little bit the next 5 years, the next 10 years, the next 15 years. And there is no doubt that the long term in Central Europe is going to be fantastic. I don't know whether we can be so sure that the next 5 years is not going to have its problems, not because of the market itself, but because of things that affect the market from outside. Romania's collapse in 2008 was not due to Romania. It was due to external influences. The rest of the world collapsed, and therefore liquidity drained to zero. And that can be a risk to Poland because of that. And I think if we look at liquidity, global liquidity, if you look at equity available in the world, real estate is a tiny part of global equity allocations. In real estate, logistics is the largest of that, and the rest of it is in commercial is all quite small. Central Europe in that percentage of global equity allocated to real estate is even smaller. So we have to remember sometimes that we are just a very small part of the bigger picture of how equity is allocated around the world. And all of this filters down into Central Europe as to whether or not, if we invest, can we get out? Where's our exit? And I think in countries like Poland, it's clearer. With other REITs coming in and other things, there will be other ways out as well. In the Czech Republic, in Hungary, in Romania, today, there is not a clear pathway to when you invest that you know in 5 years' time, in 4 years' time, in 6 years' time, that you will have liquidity and the pricing of that. And that means you have to guess. And for that purpose, it becomes quite difficult to then understand what your exit is, what your business plan is, and can you hit IRRs. So to answer your question, where do we see opportunity in the region? I think on the long term, in every country, assuming that all the things that are non-commercial, non-real estate, so politics, geopolitics, economics are all stable, which I don't think we can assume. We see it in all the countries, but these countries need to find ways to create vehicles that create liquidity when the international market, the international capital says, I'm not active today. And that means that we need domestic funds, we need domestic listed funds, we need REITs that are listed or not listed. We need ways to create liquidity where we don't rely on Western international capital to give investors exit. And I think today Poland is clearly a much better place for us. We believe in this country a lot. We can't find the opportunities at the moment we'd like to because of the pricing. But we also can't find those. It's more difficult in the market south because of those factors, including pricing today, including liquidity concerns, and also, but the fundamentals, there's no doubt. One thing I would just add to that, I listened to a conversation at a European conference in September. I went from a room of Western European players talking about the situation, which was doom and gloom. I went to halfway through, I went to the CEE one, Adrian was there. It like I'd moved into another world in terms of optimism. And I would like to think that's true, but one of the comments that were made, that if the things that were being said in that room about the next 5 years are true and play out, then Central Europe becomes a form of hedge to Western Europe from the point of view of real estate risks. I don't believe necessarily it's as simple as that, but I think that Central Europe, driven by Poland, can create certain hedges when you want to invest in Europe to have certain reasons why you come here. Obviously, pricing can be more attractive, but I'm not so sure that if things play out in such a bullish way, that we can assume that Central Europe did not do a very different thing to Western Europe because of the links between the two, and that Western European issues will impact Central European issues. And that's what I think we have to keep an eye on and be a little bit more cautious the next 3 to 5 years for outside factors.
Okay, great. Does anybody have any questions? If so, I'm going to scan the room for about 2 seconds, and if there is no hand up, then I'm going to move on quickly. Excellent. Oh, there is one at the back, yes. Oh, now that's going to be a challenge. I'm going to not run, because that would be rather vulgar, but I'm going to just walk slightly faster.
Hi, thanks for the discussion. And my question was about hotels. You mentioned that it was the highest investment volume since what year, sorry?
I think what I know is like in this quarter, we had quite a good volume compared to 2023. So it's picking up, and that's because of the revenge travel concept, so to speak. Because if you think about it, passengers numbers are back to whatever it was pre-COVID levels. So, and that's obviously, if you go, I travel here, I had to stay somewhere, no? So it's all that hospitality piece that is moving along in that respect.
Thank you, Mirella.
Brilliant.
Great. Any others? Looking. No, great. Good. Just final one from everybody. I think that was really interesting. I think what you said there, Tim, in terms of how the rest of the market perceives it, and that there may be different types of opportunities that aren't sector-led at all, aren't necessarily the fundamentals. But let's just finish, and then we'll go to the coffee break on where you see the biggest opportunity. So I'm going to pass this over to you first. Here
we go. I mean, again, you have to, of course, look at the perspective of countries and sectors. Yeah? So, it's hard for me to comment on logistics. I wouldn't say like, oh, I know everything about that. So, of course, I'm more expert into office investments, so I can say only about this. So don't, like maybe treat this as a, some kind of a PR. But at the moment, when I look at the sphere of the capital, if let's say, again, we have to look at the different profiles of investors. So the core, core plus, opportunistic. But simple answer, yes. Because it was a previous question. If I had my own money, yes, today, if I were to invest in the office sector, I will really look into Bucharest. I see there, the biggest chance of the yields are at, 8% plus, yes, for core properties. You can get financing at, 6 something, Justina, I hope. So there is a good premium, good positive leverage, which you cannot beat in, for example, CBD Warsaw or CBD Prague, CBD Budapest, and then there is a potential of office rental growth.
Okay, great.
You have to come to London to invest in London. Prime offices, because they hit the bottom. I read Landsec's report, I think it was issued last week. Occupancy for prime is 18% up from last year, and also rents are up, so you have to keep that.
For this, then, Mirella, it's got to be an opportunity in CEE.
Yeah, in CEE, wholeheartedly, student accommodation. There needs to be done more in that area. Partnership with universities, more investment to see there.
Okay, Justina.
Well, I would focus on Poland, I guess, not just by heart. And again, I do believe that there are opportunities in every market segment. So really case-by-case approach, and yes, looking on what's on the table available to invest.
Okay, Tim.
I'll also have to go back to two different timelines, 5-year and 10 years. So on a 10-year basis, I would look at repriced offices that are repriced. I wouldn't necessarily buy today, but I think in the next 12 months, I think there's a little bit more movement in the pricing. So on a 10-year basis, to collect offices in Bucharest and Warsaw particularly, but any Central European capital, very well located, not fringe, not decentralized. And on a 5-year basis, I would look at stabilized, pretty simple value retail, which is what we do in Poland, in any of the countries that is basically must-need retail for the average population, not expensive. Whatever happens, people need to shop for the basics, and there's enough evidence now to see that if you buy retail, you pretty much see your competition existing. 15 years ago, you were always guessing about the next project. Now, when you buy retail, you can pretty much see the competition and assess it. So 5 years retail, 10 years offices, but repriced offices going into the next 10 years.
Great, that's encouraging for you as well, Adrian. So even in London, you'll get a welcome back again. Even retail is now getting a welcome back again through the doors of investors. So really interesting. Thanks for sharing all of your views. Thanks as well for the questions there. Fascinating morning so far. We've looked at a lot of the trends, some of the opportunities. Deliberately didn't mention Ukraine in this because that's going to be the session after the coffee break.